morning. All right, guys, we got a little stabilization here. So, when was it? Walmart news. Things were down considerably on a little plunge here. And I think this was just based on Walmart coming out with good earnings. And I saw it was up about 7 points or so. Just kind of reinforces the irrationalness of this market. Like, what's Walmart got to do with everything that's going on and why the market went down and the yield curve and all of that? But maybe I missed something when the news. But anyway, looking at the charts, what do we have going on here? So prices pushed down to the area of that prior bottoming tail bar. So as always, we look to the left. Is there a reason for a turn? As if we were kind of trading in a cave, so to speak, and if we were just looking at the charts and saying, well, where are prices likely to turn? And just based on, what happened here yesterday, as I mentioned at the end of the day, that this was like a climactic buy. It tried to stabilize, but nonetheless, climactic buys are only counter trend trades. But we had prices come down to the area of that prior low right there to the left. And you can see right there, 7,400 prior low right there. No fib lines, no trend lines, no bands, no this or that. Just simply look over to the left and, is there a prior low? Well, expect buyers to be there. And then we wait to see how much. Now, as this plunged down there was news and it just ripped right back up again. However, if you were prepared and said, okay, where are my reference points? You'd say, well, there's one and there's one. Might this one hold? I don't think so, but maybe, since it went down like that. So now what we have is, step by step here, we have a little breakdown that failed. Just looking at this area here, because it tried to go up, right? It tried to go up from here and then it whipped back down again. And here we are, back up to the area of resistance. We've got a wide range bar, and so far it's just consolidating there. We've got the 5 minute. I changed this from a weekly to that we typically look at to see a little more detail as to what was going on here. And so little breakout failure there on the 5. That's the topping tail on the hourly. Is it pushed up? So far it's hanging there, and we'll see. So going into today, we always do the same thing, multiple time frames. So this breakdown failure is, buyers took control. So short-term bullish, we got a wide range bar, which tells us it was a powerful move to the upside. And so far it's stalling at resistance. And if it can hang up here, that opens up the door to a further move up into the price void, which is the giant red bar from yesterday. So, we'll see this kind of a bar, historically, normally I would say impossible to retrace that and negate it. In this market, I'm not so confident that it's not possible to negate a bar like that. It still seems unlikely, but, we have the void because of the move down. So if it can hold here, which could take, well, it could blast off, but let's just say it for 15, 20 minutes, what have you, it can hold here. Well, that's positive, and that opens up the door to a retracement. How high will it go? Well, it's possible it can go all the way up here since there's no resistance, and that brings in the concept of, can it create resistance somewhere where there is none? And so we would then just watch this to see if it goes up. Does it, create an M top? Does possibly the S&Ps not move up and the NQs do, or vice versa? So this is where, our work cannot be totally defined by just looking at a pattern where one market can affect the other. And so we'll see as things evolve. And so it was pre-market here, as we always do. We look through some other markets to see, is one outperforming the other? Is there some differences? And as we've seen in the last couple of weeks, these markets pretty much moving in lockstep with each other. Maybe not exactly the same percentage wise, but the pictures look pretty close. I mean, nasty move down, back up, down, up, nasty move down. It's in the area here. This one, you can see it's just slightly under the bottoming tail bar low, where that punctured through. And this is why, I find it helpful to look at multiple markets to see how one is acting, relative strength, relative weakness, because the NQs came down to the low of the bottoming tail and bounced. And this one went through, which could have, I guess in any event, not even knowing what's to the left, looking at this picture on the 60, that it would have kept going. And if you knew that low was there and it broke through it, that would have been something to suggest it could keep going. And then the NQs bounce. So again, keeping an eye on, these two markets especially can be very helpful in knowing when one might reverse because of the other. The Dow up 173. This got close. It got pretty close to getting down here near that prior low, but you can see the pattern again is the same on the 60, the wide up. It's consolidating. It tried to move up. It came back in again. So same things going on here. And it's going into the open. We'll see, can this move up? Here's our minor resistance area, that prices broke down through. So that could be a possible stopping point. I would think, just looking at what's real, when I say what's real, I look at what's directly to the left of current prices, and it's kind of like those overlapping opens and closes right there look like a more significant stopping point as to what's directly to the left, because this is going to be a base in a smaller time frame, and it is in a whole number at 96,000. So that's the place that I would keep an eye on. And scrolling back to that, as you see, that's this area right here where there was that little stall in the move down. There's those overlapping bars right there. So, we'll see. But, this pattern is suggesting that it can go up. So we'll go with that initially unless proven otherwise. This came again, a little closer, but almost all the way down to the prior low there. But you can see the same picture. It's everywhere. Big move down, continued. Everything turned back up again at the same time. Wide range bar consolidating here, where traders try and figure out, is this reversal real? Can it really go back up again? Was yesterday overdone? And we're going to turn higher here. So all of those thoughts are potentially what might play out. And we'll see it go sideways, or going to get pushing back up into this void. Or is Mr. Schizophrenic come in here and this thing nailed back down again after the first half hour, which I would, say if this 5-minute breaks down below this level here, well, then we have to say, well, form this resistance area, short-term move to the downside is tradable. But overall, as I look at what's going on here, I think up and down is going to be somewhat limited today, which is typically the case after a wide range bar like we saw yesterday. Wide range extreme bars like this, and this is quite extreme, are typically followed by some kind of a consolidation day. That's a 20 MA, right, trader. That's a 20 MA. Should be, as last I remember. I'm working off of this, yeah. You can see right here. So 20 MA, and this here just tells me what the high and low of the current bar is, and the prior bar, and the range. Helpful for money management to know, what the current bars, whatever you're looking at. So this updates to whatever is in the chart. Transports, what'd they do? All right, they joined the party yesterday, the bear party, and going down. These things don't move pre-market, but We'd see if they have the ability to reverse or not. So it looks like, like everything did, it looked like it's going down to the prior low. So we'll see. Just looking at these markets here on the ETFs, a lot of people like to know what they're at. So, that was a nasty, and this shows the gap, nasty gap below a green bar like that. And, it stalled in the area of that prior low. So sellers kind of backed off a little bit in the area of that low. And now, it's gapping up 174-ish, just so halfway up into the green bar. It's a decent start to the day as to a gap into a red bar. But, it's got to hold the whole rest of the bar. It's not like gapping above the high. And in any event, as far as gap trades go, even if this was gapping above the high of the red bar, while it would be bullish as far as a low, it's not a great setup for a gap trade. But we'll see where this plays out. Qs. Gap down, 183.60-ish. Where's my line? Okay, all right, whatever. 183.60-ish, under 180, just a 184. So not that significant a gap into a red bar, but a decent start. Same picture here. If you're looking at the Qs versus the futures, can they hold here for the first half hour, give or take, and then move up into the void above? Spiders, the bigger red day, and 260, about halfway again. Same story. Can they hold here? Or do we go back down again? And this is the day chart. So 260, I believe, right? 268, gapping above here. So, looking at the day chart, which is extremely helpful, in the combination of 24-hour chart and day chart and assessing the agreement between the two, it is a big plus or thing that should be looked at as far as making decisions, long, short, or are they out of alignment with each other, which tends to make things a lot more erratic when they are. So a gap above here, clearly, just looking at this chart, this time frame, is positive, and it's got the room to move up. So, and this has got the room to move up. So initially here at the open, unless we get some wild whip, and we'll wait maybe 5 minutes or so, unless this collapses back down, I have to have a long bias here for at least day trades for the morning, as long as this holds. And again, the same story. So the point is, this went sideways, since, as you can see, from around 12 o'clock into the end of the day. Nothing happened. So this is, we have what we call an end of day base. And prices are gapping above the high of the end of day base. And there is somewhat of a void above, I recognize this congestion there. So that means we now have, this is support. If it had gapped lower, clearly it's resistance and it's got room to keep coming down here. But initially at the open, we've got a bullish intraday pattern going on, which suggests go long as for a short-term move, but it would have to rally, up above here and stay above this red bar to negate yesterday's move down, which again seems unlikely, but Mr. Schizo market could have other plans. And again, the same story here, where prices are at almost 160 and 186, gapping above there. We've got support. So there we go with that. And look at oil here, which is down a bit, no big deal. It's starting to come in as I speak. Just kind of, whippy kind of price action here. And it came down to the prior low, got close to resistance, and it's just kind of working through what appears to be a trading range for the moment. So not great odds there. Bonds are coming in a bit, topping tail, which, is the breakout failure when the market's reversed back up, bonds came down, and that kind of alleviates, the inverted yield curve picture story for the moment. So as long as bonds are moving lower and the markets are holding up above that end of day base that we just looked at, today could be a positive day. But overall, in the grand scheme of, looking at what we have, unless it gets all the way back up and negates yesterday's move, is just a consolidation day. So what I'm trying to bring out here is showing you all of this in multiple time frames is to keep the short term in perspective and don't get overly bullish until a higher time frame supports that bias. Where do I see SPY resistance? Well, it's already above here. So when I look at, an area of resistance, you have to put it in the context of where prices came from, or what does that resistance, look like comparative to the support that was created. So my bias, and this is just looking at this time frame, when I see this, is that this is bigger than that, just putting it in simple terms. So this gets more weight than that, and which suggests that while this is a stall point right there, this larger area suggests the potential to get through it. Now, it'll stall there because that's what everybody is looking at. And then, our method moves to, okay, what happens here when it gets there? If it collapses, it's like, well, there's the big money lurking above, just waiting for the opportunity to unload again. If it goes sideways, like we said, this is going sideways up here as we looked at the futures. If it goes sideways there, well, then that pushes our bias to saying, hey, here's an unfilled gap and a void. Can this now start to move up from there? And, so that's our kind of big picture view of interpretation of that price action. But in the moment, we would then look at the details of that price action. And what that means is, so while this gets up here and starts going sideways, what if it plunges down like this and comes right back up again? Then that tells us that the big money is lurking below and they're looking to pick up shares of whatever it is. And we're talking SPYs here, but it doesn't matter what it is. So we would see the detailed price action in the moment when prices, should they get up to there, which they should, based on this pattern and where prices are right now. Right? Makes sense. I think so. Everything that where my mind has gone as far as interpretation of price action over the years eventually led to, this is just common sense. So why are we looking at all the squiggly lines called stochastics and MACDs and this and that and the other thing? If I can just look at the price action, that's going to guide me as to what other people are doing, big money or not. What time is it? I'm getting late. So there's the market stuff. Dan's not here, so let's go through these trades or gaps that I can do quickly. Bonds, we've looked at. Gold is just hanging up there. It's bullish. Silver, it's a wild whippy day there, still holding up. Look at it on a closing basis. It's strong, sideways. Looks like it's going to go higher. And you just got jiggles going on there. So for opens, we had C, B, L. Okay. Okay. Which was long stock. Looks fantastic. It's kind of flattish here pre-market. Looks great, especially in this market. And let's turn that to a weekly. So bottoming pattern looks good. C, D, L, X looks great. So, we got a wild schizo market, and there's stocks out there, as we call, being on their own page. That looks good. And we got a short of JHG. Looks great. It's not moving pre-market, so no one's interested in that. All right. Naked puts on XYA. So that looks fine. 115. Looks like a no-brainer. They expire on the 16th. Dish. Long stock. All right. I kind of don't get that one. I kind of missed it, but whatever. It says long stock. Oh. Size 3316. I don't know, those of you in the room, you kind of keep more track of some of these things. Unless I point something out to Dan, I'm not really paying attention myself. So I guess that's a climactic play. Where's the stop is 31.55. Well, maybe the market saves it. We'll see if that moves up. And what else here? MLN. This here is long stock at 30 bucks. No, 30 shares at 164-ish. No, what the hell is this? Oh, I'm looking at the wrong thing. 247. Well, it's just consolidating. It looks fine. Market's up. We'll see if it can take out this this high here. And what else we got? Casey. I got a covered call on that. That's typical for Dan. That's exactly what he would have done. With a bar like that, I would have sold a call against it to lower cost, 164. So it's a little bit below. Took in, it doesn't say here what the call was sold for. I got to look at the commentary. Anyway, we'll see. This is not doing anything here. We'll keep an eye on it. And WW. Looks great. Up here a little bit. That looks good. Long 27.93. Looks great. And CBOE. Market's coming in a little bit here. Not negating that big green bar, but coming in. 115. 115. Long stock for and sold the 119 calls. All right, this will be interesting to see what it does. So far, it's okay. And I think the only weekly options trade, which has been kind of light on that, is MLN of a bull put credit spread. And that kind of looks like a no-brainer for the moment. A 140. I mean, a 240, 230. So that looks great. Kind of hanging here. And as we'll just have to see, as long as it holds up here, that'll be fine as well. So that's it. Open's done. Market done. And any gaps of significance down here? Well, everybody knows Cisco got shellacked last night and is holding here a little bit with the market, but that looks god awful on the weekly chart, breaking down under these lows. You know, Amazon, look at this weekly chart. I don't know where this is going to end today, of course. But it's up here, right, close to 1780. So this gapping up about halfway into that bar as well. But look at this weekly chart. If this looks like this at the end of the week, you've got a potential measured move type of scenario, which would take it under this low and probably down to here. So, and that, of course, would be something that the markets would probably be going to the downside as well, which, you know, until proven otherwise, they look like that's where they're going. But we'll see where today ends. And what else? Roku is just doing great after it. It's had a run up, but this is something you want to keep an eye on. When it reported its earnings, that thing ran up there. So let's keep an eye on that one for pullbacks. And everybody, Walmart, you can see is blasted off here on its earnings. A weekly buy setup there. Kind of made sense that it's just in the right place for the turn, whether the market was going to allow that to play out. But clearly, this kind of pulled the market in its own direction here. What else is going on here? All right, so markets are open here. Let me pay attention to what's going on there and other gappers and switch some screens here. So YouTubers, have a great day. We'll be back tomorrow with you guys, and we'll talk soon. Nice. 1 second. All right, give a sec here.